Well, good morning, folks, as we head into European trade on Friday, the 18th of August, at the end of another week, and of a pretty busy week and a pretty bad week if you are a long-term investor in stocks. Pretty one-directional moves off the back of China. Primarily China, but then the Fed weighed in on Wednesday. So Chinese economy continues to struggle. Evergrande, they call it here the property boom post China's Evergrande, but it's a real estate company filed for Chapter 15 protection in a U.S. bankruptcy court, putting an exclamation point on a torrid week for the real estate sector and stoking expectations that authority will at some point leap to the rescue with bold stimulus. But as long as they don't do that, markets likely remain under pressure, and they have done it into the close yesterday, and then overnight they have not managed to bounce back, and stock downside has been the story of this week. You come back to yesterday, we had a solid yield downside, which maybe you thought might have sparked some upside in stocks, but it's a little bit disjointed at the moment. The correlations between the bond market and the equity markets. On one of the day you get rates higher, you get yields higher, which is a negative for equities. On other times you get yields lower, which is bonds being purchased as a bit of a safe haven play, and it's just all been negative for equities over the course of this week, regardless of whether it's yields remaining elevated because of interest rates potentially higher for longer, or even being risen again, or just general safe haven flows off the back of purchasing government bonds. So really, there's not a lot of positivity in markets at the moment over the course of this week. You can see oil set to snap 7-week winning streak on US rate outlook and China woes. And again, it's just all, wherever you look, it's just all about the US rate outlook and China. Apart from that, not really too much to go off. You can see Australian, New Zealand dollars caught in a crossfire from China woes, US yields, and everywhere you look, it is speaking about China's problems and US interest rates remaining a bit higher for a bit longer. Now, you come across here and you have a look at US equity futures, European equity futures, Asia Pacific equity futures. You can see Asian markets down pretty heavily overnight, 1.5% for the Hang Seng, 0.6 for the Nikkei, a couple of these down 1% and stuff. So certainly not positive when it comes to Asian stock indexes. You come around to European equity futures, they are lower across the board before we've even opened. US equity futures pretty flat, but you can see 1 week percentage change against all of these bearish. Month to date percentage change has been terrible across stocks over the course of this month so far. 3-month percentage change for European stocks certainly has not been good, along with Asia Pacific equities, and that has kind of filtered across into the rest of markets. You can see bonds being purchased, yields lower, so global bonds higher, global yields down. You have to imagine that's a bit of a safe haven play off the negativity in stock markets. You look at the US dollar. The US dollar is pretty mixed, and there's not a great deal of direction across there. Where there is direction is the Japanese yen. US yields lower, supportive for the Japanese yen, and you've had a long time of US yields trending higher. So the fact that we've had a solid pullback, and that has proved a solid pullback or solid bounce back, should I say, in the Japanese yen, and has been supportive for the Japanese yen, which is what we were looking at yesterday in yesterday's videos. If those yields did start to pull back, and they continue to pull back, which they have done into yesterday evening and into this morning, that would be supportive for dollar yen, or negative for dollar yen, and be supportive for the Japanese yen. So that certainly was something to keep an eye on in the overnight session. The Australian dollar, Kiwi dollar, I mean, it's suffering from back there. It doesn't seem like they're suffering too much this morning, but month to date percentage change across these is certainly pretty bearish. So not a good month for the Antipodeans. Across to the calendar, you can see the calendar across here. Start with this, where we've got retail sales out of the UK this morning. So we get back to it, just reset that for me, unfortunately. But retail sales negative in the UK, consensus minus 0.5, minus 1.2%, should I say, for the actual figure. You look at the year over year figure, minus 2.1 for the consensus, minus 3.2 for the actual, minus 1.7 once you exclude fuel, minus 1.4%, minus 3.4% for the year-over-year figure, excluding fuel as well. So negative consumer spending across the board in the UK this morning. Come across here, and that has been negative for cable, right? And downside in consumer spending, negative for cable. Less people to spend money, less pressure it puts on prices, and a pretty substantial drop in the price of sterling over the course of this morning, and certainly over the course kind of half an hour, 45 minutes since that release came out. So I would continue to, you'd have to continue to be bearish on sterling over the course of the rest of the day. Kind of reverses some of those gains from earlier on in the week, or most of those gains from earlier on in the week that we were speaking about, off the back of slightly higher than anticipated inflation and strong wage growth to continue to put upside pressure on inflation. But extremely weak consumer spending has paired all those gains, and probably looks set to continue for the rest of the day at least. But the rest of the US dollar pairs, your Aussie, Kiwi, Euro, pretty sideways. You look at dollar Swiss, dollar CAD, pretty sideways. Where your direction is coming from at the moment is this dollar yen. Clear downside direction in dollar yen. You come into lower highs and lower lows, and that as long as these yields continue to push lower, which they are at the moment, you'd have to continue to be bearish. Have to continue to be bearish dollar yen, and have to continue to be long gold. But long gold isn't really the one that's playing out at the moment. Short dollar yen, off the back of some kind of safe haven flows from kind of a few safe haven flows off the back of equity downside. You get safe haven flows into bonds, which send yields lower. Then that also pushes dollar yen lower. So dollar yen lower seems a decent bet as we head on to the into the European session and into the American later on. But in terms of economic data later on this afternoon, we've not got too much. You got some Canadian PPI, which we're not really going to care about too much. Inflation from the Eurozone, but is the final figure. It's not the flash figure, therefore it's no high impact, and really we are through the high impact economic data over the course of the evening, over the course of the week. Japanese inflation, sorry, I forgot to touch on consensus 2.5%, actual 3.3, consensus 3.1, actual 3.1. So that is obviously a contributing factor to some Japanese yen upside as well. So kind of a double factor for the Japanese yen. Upside in the Japanese yen, stronger than anticipated inflation, yields lower in the US, bit of safe haven flows from equities. It's a good recipe for Japanese yen to move higher. But through the economic data for the week, we'll see how markets react over the course of the European session, and we'll be back to update a little bit later on before the Americans log on for trading.